Welcome to the last part of the lecture on the IPSAS conceptual frameworks and views on some selected national frameworks. In this part of the lecture, we will summarize a comparative analysis of different conceptual frameworks, taking the one from IPSAS as reference. The countries involved in this analysis are Portugal, UK, Finland, Austria, and Germany. Before I go through these tables in the forthcoming slides, I would like to underline that I'm not going to read all this in detail. You will do it at home with the help of the bibliography. But I would like to start by saying that, for example, in Austria and Germany, we had to separate central government from local government because, as I have mentioned before, whereas Austria in central government is approaching IPSAS in regional and local government, especially in local government, the accounting system is pretty much cash-based budgetary reporting. And in Germany, we focus essentially on central government, and the issues that are presented here are valid if accrual-based accounting is used, because in fact accrual-based accounting in federal government in Germany is still an option. In fact, the public sector accounting reform in Germany was a bottom-up process, and some regional governments and some municipalities are more advanced than the federal government in the sense that they have accrual-based financial reporting and accrual-based budgets. Small municipalities are essentially cameralistic single-entry cash accounting. Well, but what I would like to highlight in this table is that, for example, it is clear that in the objectives of the financial statements in UK, the decision-making purpose is not explicit. On the other hand, in Finland and in Germany, it seems that the purpose of accountability prevails. On the side of main users of the financial statements, there are more commonalities than differences. However, we have to consider that, for example, in cases where cash-based budgetary accounting prevails, the main users are essentially central government and citizens and supreme audit institutions. And for example, in UK, it's curious to notice that the conceptual framework clearly mentions the entity's management board and the entity's audit committee, more internal users than on the other cases that are external users essentially. In terms of main accounting principles, and I advise you also to read the lecture, to address lecture 5 for this, it is again clear that Finland and Germany adopt a more conservative approach here, prevailing or giving more importance to the prudence or conservative principle precisely. As explained before, the UK is the system is IFRS basis, so there is the purpose of there is accrual accounting, of course, the accrual regime, substance of a legal form, going concern, true and fair view, and there are the purposes of accountability and decision making, although not explicitly. And it's in the UK there is cash and accrual based information, and in Portugal there is a clear reference to cash and commitments regime in budgetary accounting and reporting, because in fact contrarily to for example the IPSAS conceptual framework, which does not explicitly refer to budgetary accounting, only to budgetary reporting, and within the IPSAS 24, not exactly in the IPSAS conceptual framework. So there is no clear references to budgetary reporting, to budgetary accounting in the conceptual framework, but in Portugal, yes. In the conceptual framework, there is a conceptual framework for budgetary accounting and reporting, and in that conceptual framework, explicitly cash and commitments regime is stated, has to be used in budgetary accounting and budgetary reporting. As to the financial statement elements, they are pretty much similar across the jurisdictions that are being analyzed here. I would like also to highlight, for example, the case of Finland, where there is an explicit focus on the revenue and expense, on revenue and expenses. So there is an income statement-led approach that prevails over the balance sheet approach. And in the case of Germany, there is an explicit reference to deferred revenue and expense that is not referred, for example, in the IPSAS V, Portugal or UK, but they are included in the other assets and other obligations within assets and liabilities, as it was explained in part B of this lecture. As to the recognition criteria, most of them, in all jurisdictions, there is a mixture of, there is accrual regime, especially in central government, and in Germany, as I said, there is an option because the accrual-based accounting is optional, it's not compulsory. And there are a lot of commonalities among the recognition criteria, fulfilling the definition, be measured with reliability is common. There is, although, in the case of Austria, Finland, and also Germany, there is explicitly the realization principle in the case of regional and local government for commitment and cash flows, and for Finland, the realization principle is used to recognize exchange transitions, and also in the German case the same. Finally, concerning the measurement criteria, again, there are a lot of commonalities with, again, I would say a dichotomy between the pro-IPSAS countries like Portugal, the UK, and directly, because it's IFRS based, and Austria, and the more conservative and IPSAS-resistant countries like Finland and Germany. And in these two cases, there is prevailing of the historical cost convention, although the market value or the fair value might be admitted for certain types of transactions, as you will read. And there is a commonality between Portugal and Austria that generally revaluation is not allowed unless is authorized by law. Well, I hope you have found this lecture useful. And now the remaining of this lecture are some questions for self-assessment and some bibliographic references that I hope will help to support and improve the knowledge and the study of the matters that I was referring to in this lecture. Goodbye and thank you for attending.